commemorate this morning by presenting a memento to Mr. Subhash S. Mundra. A huge round of applause, ladies and gentlemen. History in the making today, and we're part of it. A big, big day today for Jio Financial Services. Thank you so very much, ladies and gentlemen. Please. Right now, it gives me immense pleasure to invite on stage Mr. Charanjit Atra, who is the Group Chief Operating Officer. Now, prior to this role, he was a Chief Financial Officer of the State Bank of India. He's also worked with ENY and the ICICI Bank Group in various leadership roles across segments such as accounting, capital planning, investor relations, operations, and so on. Right, can I have Mr. Charanjit Atra over here on stage to give us his speech and a vote of thanks.
Good morning, everyone. I really feel very privileged to be here on this historic occasion and to deliver this heartfelt vote of thanks on behalf of Jio Financial Services Limited. As we all know, saying thank you is a respectful way to show appreciation towards a person, but these words would be too less for our esteemed chairman and the other dignitaries on the dais, very respected and senior officials, my friends, colleagues, and other guests in the audience. Nevertheless,
hello and a very good morning to all those watching this broadcast here on News 9 Live. I am Krishna Kumar and I'm here bringing you live visuals straight from the Bombay Stock Exchange in Mumbai, where the Reliance Jio Financial Services stock is being listed as we speak. In fact, the listing will take place in just minutes from now. For now, what you're watching is the management of Jio Financial Services being felicitated and them delivering their opening addresses before the official listing takes place. Bear in mind, 10 a.m. is when the official listing is supposed to begin. Former SBI CFO Charanjit Singh Atra has joined the Jio Financial Services COO, and that's the person who's on your screen speaking. We'll be bringing you more details of all the management that is sitting over there on the dais. In fact, one of the most iconic bankers of this country, the man who set up the retail banking arm of ICICI, Mr. KV Kamath too, is on the board of Jio Financial Services. Hitesh Kumar Sethia is being appointed as the CEO of Jio Financial Services. This is the first management come together, so to speak, as the stock gets listed. Bear in mind, 10 days, the stock is going to be trade-to-trade segment with all the circuit filters attached to it, after which it'll be up for public trading. But for now, the entire dais, as you can see, from KV Kamath to former RBI Deputy Governor SS Mundra, also presiding over the proceedings this morning. Ladies and gentlemen, those are live visuals coming to you straight from the Bombay Stock Exchange in Mumbai of the listing of the Jio Financial Services stock. And joining us in the studio this morning is my friend and colleague Kartik Malhotra. Kartik, historic scenes technically speaking, because this is a stock that has been carved out of the Reliance Industries stock, the most valuable stock in the Indian stock market. Everybody wants a piece of the Reliance stock, and this is a part of it. So how do you view this? Is it early days?
Absolutely, Krishna. There is history in the making. Just a few seconds or so before we ring that bell, I think Mr. KV Kamath is going to ring the bell. Let's get the audio up of the feed that we are getting, and I think that bell is going to be iconic. Should be The hammer should be hitting the bell any second now. We'll continue talking about it, but yeah, I'm waiting for the hammer to come in the frame.
But
I'm waiting for the
everyone
ting
with the
sound
cameras,
of the bell,
But
which is so
meanwhile,
historic.
pardon my poor pun, but
Please keep the
Kamath, the
cameras
hour,
clean.
Kamath, the man,
We are
KV
getting
Kamath,
ready
one of the
now
greatest
for
bankers,
the
financial
final
services
countdown.
mind in the
This
country,
auspicious
being
moment
brought
that we've
back
all
out of
gathered here
retirement, so to
for
speak.
This is the moment,
There's
ladies
the
and
hammer.
gentlemen, it's coming
There
up.
it goes. History in the making right here in front of our eyes, Krishna.
Yep. Three,
And we request
two,
everyone
one.
who is
We are in the days of
whether on
Chandrayaan
the
launch.
stage
It says
to not
another 40
stand. It's
seconds,
going
40
to block the
seconds
view for the
exactly now,
cameras.
39 seconds.
You
It's
can
all
just
about
keep sitting,
countdowns
please.
these days.
Thank you so
Chandrayaan
much.
to Geo Financial Services.
Yes.
30 seconds to go now.
KV Kamath there.
The countdown has begun. Less than
All
30
the
seconds to
smiles.
Year
go.
to year.
Yep.
I wonder how many times he's
The final
that hammer.
20 seconds, ladies and
Yeah,
gentlemen.
I was just thinking that,
Exciting
Karthik.
time.
Okay.
15 seconds there.
Okay. As we speak.
And here we go. One more gong, sir. One more gong. Geo Financial Services, ladies and gentlemen, live on the BSE.
That's right, Geo Financial
Congratulations
Services is
to
now
everyone
live. The stock Geo Financial
part of
Services is now live on the BSE. From KV Kamath to the rest of the management, all of them sounding the gong to
And keep the
sound
claps going,
essentially the
and keep the
arrival
claps
of Geo
going, you know.
Financial Services stock in the markets. Price discovery, bear in mind, has arrived at 261 odd rupees per stock. It's just an initial price discovery. It's going to trade in the trade for trade segment, a limited trade segment for the next 10 days, where it to control volatility, the price of the stock will not be allowed to go too much up or too much down. That's what the trade for trade segment essentially means. So when a new stock lists, to avoid any kind of volatility impacting the
can see
price
the
of the stock,
excitement in
the first 10
everyone's
days you
faces
have
and
a
everybody's
trade for trade
eyes.
segment,
It's
where
a
the
very
stock
auspicious
price doesn't
moment
move
for
much.
this company.
But what will happen from the
very
1st of
proud
September
one too.
onwards is what is very interesting, isn't it, Karthik? But Karthik, as we speak, let's also bring in our guest this morning who's joined us, Mr. Gaurang Shah of Geojit Financial
Everyone over
Services.
here in the
Gaurang,
right
a
seats,
very
please
good morning.
remain seated.
A good morning at the BSE as well. Not every day that you see a stock being carved out of Reliance listing with such fanfare.
Thank you, Krishna Kumar, and morning to all of you all. So, I guess it has been a long-awaited, listing. Of course, the session of price discovery of 261 remains to be seen what the commentary from the management is in terms of where they want to take the business with the kind of corpus that they have. It will be interesting to possibly look here into the management commentary with respect to business and which are the areas that they are going to focus. But yes, it's one of the listing that was anticipated and waited for quite some time.
Good morning, Gaurang. I think very interesting story here coming from Geo Financial Services. The price discovery coming at 261.85 when the market had estimated the price discovery to rest in the range of about 170 to 190. So obviously the stock there outperforming the discovery, outperforming market expectations, and the grey market trends are suggesting that perhaps the listing, when it does happen eventually, could happen at 310 and upwards. What are your views on the stock?
On my left hand side over there.
Well, so, before the price discovery session and before this particular listing, when the entire verticals were under one balance sheet, we were positive. We are in fact still positive on Reliance Industries per se. Our sense is that a lot will depend upon what are the areas of business focus that and what are the products that they are going to come out with, what kind of earnings they are possibly projecting. Let us not forget that this particular sector, that is NBFC, is overcrowded, but with the kind of financial strength that they come into this particular business of Geo Financial Services, and of course the likes of BlackRock coming through, we could expect a little bit of fireworks. And competition is definitely it's on its peak, but our sense is that they will definitely find a place over here. So a little early to possibly give you any kind of price targets on Geo Financial Services. I guess we should possibly just wait out and see how the valuation is done in this particular sector. And not to forget, I think since the business was under Reliance Industries at some point of time, we remain optimistic about this business as well.
But as of now, so many questions hanging over Jio Financial Services, especially their joint venture, their international joint venture
with BlackRock.
When are these products going to hit the markets? How will it go? Because we've seen these things not do very well, these international collaborations, especially in financial services. Be it insurance or any kind of financial service. We've seen what happened in Future Generali. So many other examples we can give. What are your hopes and thoughts on this entire BlackRock coming into this picture, and that how do you see that impacting the fortunes of Jio Financial Services?
So I guess there would have been a lot of introspection that would have been done. And not to forget, these are two big names we are talking about, Reliance, that is Jio Financial Services, as well as BlackRock. So there would have been an in-depth understanding between both the parties in terms of what they want to bring in, what they want to offer to the customers. And my sense is that with the kind of reach and database of the parent company, I don't think it's going to be very difficult for Jio Financial Services to penetrate not only into the metros, tier 1, tier 2 cities, but also into tier 3, tier 4, and more so into semi-urban and rural India, because that's where I think there's going to be a huge focus in terms of small ticket lending. And the small ticket lending, the good part about that is that the repayment run rate is almost about 90% plus when it comes to repayment of principal and interest. So it would be interesting to see. Yes, in the past there have been certain failures, but with these two big names, I don't think we should have that kind of fun.
The hopes are high, Gaurang. The hopes are high. The reason why I'm even asking this question is because the stock is already listed, but we have little to no idea about what exactly Jio Financial Services does, or what does it sell.
That's what I think everybody is waiting to find out, and hence what Gaurang was mentioning about the management commentary. I think that is important, because last week, Krishna, you and I were talking to Mohit Gang, and he had said that it could take up to 2 years for the license for an AMC to really come Reliance's way.
Which basically means a Jio BlackRock mutual fund to hit the markets, it will take 2 years.
It could take up to 2 years, right? So that, of course, then makes you believe that is it going to be into institutional lending? Is it going to be an institutional finance, a typical definition of NBFC versus an AMC? And already, Gaurang, it's with the price discovery at 261, the market cap of JioFin, which is its symbol incidentally on the stock markets, JioFin, is the second most valued NBFC in India.
Whoa.
Just inches behind Bajaj Finance. So, we know disruption is the DNA of anything that comes out of Reliance. But on even ahead of your listing, you're the second most valuable, NBFC.
And we don't know what is.
And we don't even know what the business model is. So what does this tell us about not just about Reliance, but about investors? I mean, anything coming from the Reliance table gets lapped up, and how?
Well, I think the charisma of the pedigree and the name does not die. And after a long time, we are seeing this kind of interest in an NBFC which comes from a very credible pedigree or name. And I'm optimistic about the sector. I'm optimistic about the reach that they would have in terms of touch points. But the only problem, like I mentioned in my opening comments, need to hear from the management as to which areas they are going to focus on. Starting an AMC again, AMC is also an overcrowded place. So you need to, and I am quite sure that the authorities and the regulators would take their time to give any kind of green signal to a new big entity coming in, because they don't want to disappoint the investor fraternity. So I'm quite sure that it will happen over a period of time. But purely, I mean, if it's anything number that is maybe close to about 280 or 300 once the trade starts happening, then I think one needs to be a little bit, don't jump the gun. That's what I would say. Wait for the management to jump where and what business and what are the products that they're going to reach out for.
So strangely, Krishna, on the day of listing, when markets opened, Reliance was actually trading in the red. It was down about 0.3% or so. Let's pull up the stocks in action.
I want to ask Gaurang this. How do you view this impact? We've been wondering how this will impact the Reliance
will
stock
it impact the parent company at all and the stock of the parent company? And a negative impact on the day of listing. Is there another news trigger that we are missing, Gaurang? Or
it unlocks value. It unlocks value for Jio Financial Services, sure, but is it taking away value from the Reliance stock, the main Reliance stock?
No, I don't think so, because the entire process of getting this business out of the balance sheet of Reliance Industries and listing it as a separate entity was done and dusted the way the price discovery special session was conducted. And I think whatever impact that it had to have is already there in the price. I don't think there is going to be any deep downside move on Reliance Industries sub 2500, that is 2500, unless and until you have some unpleasant event on the domestic or a global front. But having said that, it only goes to show the kind of faith investors have in the credibility of any entity that comes out from the Reliance brand name.
Right, so we will have to, this is very early days, don't jump the gun is the word that already Gaurang has told us. We won't jump the gun, Gaurang, so we've taken in all the commentary from analysts like you for now. We'll have to wait for the management commentary on Jio Financial Services as we go forward. But let's talk about the markets this morning, Karthik. Tell us, barring all the attention which seems to be garnered by Reliance and Jio Financial Services, there's the rest of the market that is trading for this morning.
They timed it well, right? Our show opens at 10 and they planned the listing at 10.
Absolutely.
So I think
we are disruptors, they are disruptors, we all disrupt.
But yeah, I think the Monday morning had a fairly decent start to the market. In fact, broader markets were up about 0.2% or so. Sensex, Nifty both up 0.2%. Where is this coming from? I get a feeling that this is largely coming on the back of GQG upping its stake from about 4.9% to about 5.03%, this time in Adani Ports. So GQG unrelenting there. Last week we had done the story of GQG investing in Adani Power and upping its stake, picking up about 7.7% or so. This morning news coming in last night, in fact, that even Adani Power, Adani Ports and Adani SEZ is now seeing GQG up its stake to over 5%. And that has driven the Adani Ports as well as the Adani Enterprises stock up this morning. In fact, up almost 1% or so when we last checked at about 9:40 a.m. this morning. And I don't know if you can pull up those graphics. There seems to be some problem with the
we'll just get a check
engine,
with Gaurang. We'll check with Gaurang as to before going to the broader markets, Karthik, let's just quickly get a check with Gaurang. Gaurang, talk to us about the opening that the Sensex and the Nifty has had and what has happened with the Adani stocks first thing this morning, the only other big action apart from Reliance Jio Financial Services.
So, firstly on the markets, Krishna Kumar, I think it's going to be a consolidation. I think this view we have put out about a fortnight back on the markets that we normally put out our view every Monday morning. And our sense is that this week too, and maybe possibly for couple of more days, you are going to see consolidation in the market. 19,200, 19,300 looks to be like a zone where you do see some buying coming in. At least that is what the data tells us over the last 2 weeks or fortnight. 19,500, 600 is the level where you start feeling a little bit top heavy. Short to medium term traders come and want to book out profits, and then you see a little bit of correction again on the downside. So what I'm trying to say, Krishna Kumar, is that this is going to be a brief period of consolidation for the markets, and I'm glad that the market is consolidating the way it is. And it is, historical data tells us whenever the markets, Indian markets, Sensex and Nifty has made an all-time high, they do go into a brief period of consolidation. And why this is good, Krishna, is because it makes a very strong foundation for the next up move to be withstood and possibly have the strength of even going much more higher and making an all-time high. So I'm quite happy to see this consolidation. And possibly we may spend some more time in this zone before making our next move.
All right, Gaurang. So basically, it's like we can take inspiration from the markets. Just because you're consolidating at a given stage doesn't mean you can't fly any higher. Maybe you're consolidating well so that you can fly even further than what you thought before. Great signs this morning, but we'll take it up from broad markets. Karthik talking to us about GQG and and their investment in Adani. Last week it was Adani Power. This week it's Adani Ports and SEZ. For the morning, Adani Ports stock up in the green, Adani Enterprises stock up in the green.
Well, so I would not give a specific comment on buy, sell and hold, but the entire group is, since last couple of months has been on news on, depending upon the news, which way the news is, the stock moves come through. Well, if it's good news, you will see an up move. If it's a bad news, you will see equally underperformance for the entire Adani group of companies. So one will need to possibly just, fathom this out, Krishna Kumar. I would not, we are not in a position to give any kind of a decisive buy, sell or hold since we don't have a coverage and we have to go by the regulation that has been put in place. So, if you have that kind of risk appetite and fathom the volatility, then you can take your own call depending upon what rationale you kind of draw out of it. But no specific comments on Adani Group of companies.
So,
and I feel it's more of a news-driven kind of a sector.
Right, Gaurang. So I think, let's avoid a specific buy, sell, hold on Adani right now.
Right.
But what does it tell you about the mood of the investors, both retail investors as well as institutional investors like GQG? Wherein is there a price correction right now? We've seen, of course, the Jan peaks of all Adani companies had fallen down significantly and they still continue to be flat. So what does it tell us about the mood of the investors? Are they likely or hoping to pick up the correct valuation in Adani stocks right now ahead of SEBI's disclosure to the Supreme Court end of this month? Are we looking at a scenario where the correct valuation or a more sort of mouth-watering valuation is being picked up right now in the hope to be able to sell it on the day of SEBI's hearing in Supreme Court?
Well, Karthik, so whenever, not only Adani group of companies, but whenever any corporate house, there is a overhang like this, and the matter has reached the courts, until and unless you have a decisive outcome of this particular, case, which is there in the court, I think there is going to be a choppiness and an overhang on the stocks as well as the corporate house. In terms of your other question, where do investors find value? Well, in situation like this, it's very difficult to find the value because, like I mentioned, the stocks move on news. So, and there is no denying, Karthik, that at post that particular Heidenberg report and the kind of correction we saw and the sharp sell-off, etc., there were people who were wanting to go and buy into it, wanting to take that kind of a risk. Now, that's what exactly I said. If you have that risk appetite and if you are able to fathom the volatility that these Adani group of companies throw at you, then you can decide and take your own call. But very difficult to pinpoint a valuation since the matter is in the court and there is a lot of news that comes through, possibly, every second day or something like that. So very difficult to point out a particular level wherein you will say that, yeah, this level is good enough or comfortable enough.
Okay, and Deloitte quitting as the auditor
Yeah.
of Adani Ports and SEZ specifically, the company in which GQG has upped its stake today. I don't know what to make of it, honestly.
Two opposite pieces of news. First, when we heard the Deloitte news, we thought that this was the worst piece of news to hit the Adani group.
And it did. And it did hit the Adani stocks as well.
Too. Since Hindenburg report came out, this was the worst drop that the Adani stocks faced since the Hindenburg report came out. When news came out that Deloitte has quit Adani Ports and SEZ, and which means that it has quit the Adani group completely. That is the last company it was the auditor of, and it completely exited the Adani group, and that was the worst piece of news to come and hit the Adani stocks. And today, Gaurang, we have GQG Partners upping stake, and that same stock up in the green, and that news also pushing Adani Enterprises up in the green. What are we supposed to make of these conflicting developments?
This is what exactly I said, the kind of news flow that is there. Now, Deloitte quitting Adani group companies did not go down well in the market, and of course there was a little bit of anxiety in terms of possibly fathoming out the reasons why they possibly did that. Post that, you have GQG coming in and raising stake. So it's all about what kind of conviction you have. Maybe somebody knows a little bit more than what you and me or I know about, but given the kind of choppiness and volatility, I'll again, a word of cautious is always better. But like I mentioned earlier, unless and until you have a decisive outcome from the court in terms of the judgment that the court is going to pass and the series of news flow, either good or bad, positive or negative, dies down, I think you will see a lot of choppiness and volatility in the respective companies of Adani Group.
Okay.
Right, Gaurang, we're going to move away a little bit from the Adani Group. We've discussed this threadbare this morning, but we need to talk about another thing that happened essentially over the weekend and clearly showing itself up in the stock markets. In the stock this morning, on Monday morning first trades, Titan stock up in the green, stock in action. Gaurang, what an acquisition! One of the biggest that Titan has ever seen, one of the business that the business has ever seen, the sector has ever seen. What do you make of Titan stock? We know about this stock, the much storied stock of the late great market icon, Mr. Rakesh Jhunjhunwala.
Well,
And the
absolutely.
sustained investment in Carrot Lane, I think that is the development over the weekend, right?
Yeah.
Carrot Lane stocks being Titan, in fact, upping its holding in Carrot Lane. I think
Yes.
Adani just keeps coming
so
back.
Titan upping its stake in Carrot Lane, making the overall total investments one of the biggest in the entire space per se. What is your thoughts on the Titan stock, the way it is this morning and the way forward?
So, disclosure first, Krishna Kumar, that we have a positive coverage on Titan. We have a buy recommendation. And we've been maintaining this buy recommendation for quite a long period of time. Extremely excited about the current businesses they have, whether it is gems and jewelry, whether it is wristwatches, whether it is eye care, or whether it is the accessory business. With Carrot Lane acquisition and the kind of price that they have paid, I think this only goes to show the kind of conviction that the management of Titan company has in terms of where to focus and where they want to take their business going forward from here on. So my sense is, and of course, Carrot Lane is quite a credible name in the high-end gems and jewelry segment. And I was listening to the commentary from the management a while back on this particular acquisition, and they are extremely confident in terms of the price that they have paid, the acquisition that they have made, and how they want to take it forward from here on. So my sense is that it will do definitely a lot of value addition to the existing business that they are in.
So typically, Gaurang, how does this move from here? What happens at Carrot Lane? I believe the founder CEO of Carrot Lane has already exited and is likely to launch another startup in the gold business itself. Now, what happens at the management of Carrot Lane? Do we see a full-fledged management change? Are we going to see Titan management come take over the corner offices, or is there going to be a fresh infusion of talent from outside?
Well, I think it will be a slow and steady takeover in terms of the management. It will be a work in progress. It's not going to be anything that want to disturb the business or hurt the sentiments. And I'm quite sure that over a period of time, you will see, the transformation coming through or the transition coming through. And like I mentioned, with the kind of reach that Tanishq has in terms of the dedicated standalone stores that they have, my guess would be that a mix of both these, that is Carrot Lane as well as Tanishq, should augur well. Not to forget, we are approaching festive season, so you are going to see a lot of positivities in terms of numbers coming through.
Right, Titan stock is usually up during the festive season either way, I think, because of the kind of sales, watches to jewelry to everything. Right, the only thing I want, right, the only thing we missed out mentioning was the fact that after this acquisition, it's a full acquisition by Titan of Carrot Lane. Carrot Lane valuation is $2 billion at the end of this acquisition, and Titan buying out essentially a promoter stake of Carrot Lane. But moving on, away from, again, individual stocks and actions we've been discussing all this morning, Karthik, talk to us. Something big has happened with the broader markets. Foreign portfolio investors have pumped in so much money like never before, and they're continuing to.
So 8,400 crore rupees invested, net inflows by foreign portfolio investors in the first 18 days of the month of August itself. Between 1st to 18th of August, 8,400 crore rupees has been the net inflow by FPIs, and this trend, Krishna, has actually been sustained right since the month of March this year. So March, April, May, June, July, 5 months we've seen net inflows, in fact, in excess of last 3 months, in excess of 40,000 crore rupees per month. Now, the only time we saw FPI pull out of the Indian markets was in the month of Jan and Feb this year. After that, since March, this FPI inflow rally has continued. Now, this is coming again on the back of course, global uncertainty when it comes to US and the broader economic scenario in the US. China, of course, we can never leave China out of any discussion on the Indian economy or the Indian markets, on which it has a very direct impact. So low confidence in global economics, very low confidence in China, and strong fundamentals of India have continued to see FPI inflow for the 6th month straight, at least up until now on the 21st of August. So good news coming there, except I want to understand from Gaurang, if he's still around with us, that an average of 40,000 a month inflows for the last 3 months, and this month up until the 18th of August, the number is looking a little small at 8,400 crore rupees. Gaurang, what does this tell us? Are we on track for foreign portfolio investments coming into India?
I have no doubt about that, Karthik, to be very honest. And with the kind of positivity that India has compared to the emerging markets or even China. The problem with China, Karthik, is that how much of the news flows that comes through China has the authenticity or has the credibility. One needs to be a little bit careful on that particular front. But there is no denying that there are issues troubling that particular part of the country. And the economy is possibly going at a very slow pace. Now, whether that transforms into positive India, yes, I strongly believe about that. And post-COVID, I think China plus one, Europe plus one policy is definitely going to augur very, very well. And even if we have to, consolidate for some time and be in a range, I don't think that's going to go as a negative for large investors because they come into emerging markets like India from a long-term perspective. If you have look at the data points, I'm not denying at all, Karthik, that in the short to medium term, because of deficit monsoon, high crude oil prices, depreciating rupee against the dollar, and the inflation, these are some of the worries that may trouble us from short to medium term. But if you're not looking at next 3 to 6 months, and if you're looking at the next 12 to 18 months plus kind of a time horizon, then I think you should definitely allocate more capital towards equity market investment. And I wouldn't be surprised if you see more number of FPIs coming into India and want to become a part of this growth economy.
More can be expected. That's the word coming from Gaurang Shah. Gaurang, thank you so much as always for taking time out this morning to help us understand and decode all that's going on in the stock markets and what we should be doing to get all that news. Thank you, Gaurang, for being with us this morning. Thank as you, always.
Have a wonderful trading day ahead.
Yes, have a wonderful trading day ahead, and hope to see you soon again on the show as soon as we can get you back, that is. But in the meanwhile, Karthik, we've done all the market action this morning. Let's just move away from the markets for a little bit and talk about something else that we love talking about, Karthik and Amit, all of us, and that is the Employee Provident Fund Organization. Something incredible has happened. Now, the new enrollments in EPFO are just going through the roof. It's the highest it's been in nearly a year, 11 months to be precise, Karthik. And you've been tracking the EPFO story for a while now. When I tell you that more than 10 lakh new additions happened in EPFO, brand new additions for the month of June 2023. What do you make of it?
I think the number, in fact, is much higher than 10 lakh. But
the net additions I'm talking about.
Yeah,
the new additions. The 10 lakh new additions. The net additions is 17.8 lakh.
17.8 lakhs, exactly right. So
but
it's
I'm really
almost 1.7 million new additions. So what does it tell us? Very simply put, it tells us that there are new additions to India's working class. Very simply put, there are more people who have been employed in the month or have been able to seek some sort of formal employment. This could be some migration from the informal sector to the formal sector. This could very well be new additions to the job market. This could very well mean that those companies, those organizations which were smaller and did not have EPFO liabilities or EPFO benefits for their employees have actually become a little bigger. They've grown in scale, and hence there is contribution to more number of EPFO members being added, by way of which obviously this number has swelled up to about 17 lakh new additions, new members in EPFO in the month of June alone this year. The
reason why I was talking about the 10 point something lakh number is because that's new additions, and that's the highest number of new additions in a month since August 2022. So it's incredible. And more than that, Amit, the interesting part here is that out of that 10 point something lakh, nearly 3 lakh were women. Women EPFO account holders.
And that's the highest in 11 months.
That too is the highest in the last 11 months.
Yeah. So, like Karthik said, more people joining the workforce in a time when there is a looming recession, it seems, in the rest of the world, which also is up for debate now in the US.
Yeah.
But Yeah, so they
More joining the organized workforce. You're talking about EP, which augurs well. More than 3,700 establishments have extended EPFO coverage to their employees. That's another important metric as well. For the month of this, we're talking just the month of June. For in 1 month, 3,700 companies of all shapes and sizes, from public to public-private to quasi-government to everything, 3,700 entities have extended EPFO coverage. I mean, this
shows the scale. These are not new companies that have registered, possibly. These are not new companies who have registered themselves as employers with EPFO, but these are companies that have actually exceeded the threshold of having at least 100 employees when it becomes mandatory for them to actually open EPFO accounts for their employees. So these are companies that have acquired scale. These are 3,700 companies that have actually gone to exceed 100 employee headcount, and hence it becomes mandatory for them to remit EPFO into or provident fund into the accounts of their employees. I think broadly, Krishna, what it tells us is that no matter what you say, social security is a big deal for a country like India, in fact for any country in the world. And despite whatever we say about the West and the European markets really, or European economies really having great social security for their workforce, for their citizens, I think EPFO is something that we have discounted thus far as social security, and that is something which is beginning to change, and hence it is important to cheer news like this, that these are people who have, these are employees, citizens of India who formally have some sort of a social security which is contributing month on month towards their retirement. And if they continue to be employed and continue to be in the job market for until their retirement, this becomes a huge corpus for them to be able to survive those golden years of retirement with far more ease, as opposed to being in the informal sector and drawing a salary and burning that up. I think this is money parked safely, securely with the government, and giving you in excess of, on an average of the last 10 years, an excess of 7% return, which is higher, and it's tax free. So higher than any fixed deposit, and once you liquidate your fixed deposit, your EPFO at the time of retirement, there is no tax liability. You don't pay anything back to the government.
Right.
And talking about job market, 12.65 lakhs, as your graphic suggested, have rejoined. That means they got new jobs. So that the job market is actually on the boom. So it suggests.
Yeah, and also what I also noticed was that the additions to EPFO enrollments are over the month of May to June is 9.7%, which is nearly 10%, which means EPFO enrollment is growing on average of around 10% every month, and that's the kind of news that we all should want, going forward. Especially when we've seen the possibilities of a harsh economic downturn, affecting all of us. It's something like EPFO that really keeps you in safe books when that unexpected harsh economic downturn comes around. But we will move away from EPFO for the time being and talk about something else, Karthik, which really caught my fancy this morning when I was going through the news this morning, and that is the fact that there is going to be a lucky draw for GST. Hold on a second, I know all of that sounds wrong. It's not like lucky draw to choose whether to pay GST or not. That's not what the lucky draw is. You qualify for a lucky draw if you upload your GST invoice via the app. And what app? That's going to be launched. It's a new scheme that's going to be launched. It's called Mera Bill, Mera Adhikar. So Mera Bill, Mera Adhikar is a scheme, and that's going to be the name of the app as well, the Mera Bill, Mera Adhikar app. And if you are a GST customer, if you upload invoices via that app, then you qualify for lucky draws every month and every quarter. And the prize money for monthly lucky draws runs into lakhs, whereas the prize money for the quarterly lucky draw runs into 1 crore or even more.
Kaun banega crorepati?
Do you want to upload your GST invoice via the app?
There is something about GST that the government right from its inception seemed to be too gung-ho about, but haven't got it right. It was filing every month, then filing every quarter, then filing every year. Then the monthly went off. Probably even that didn't do things right. There were incentives. Now there is this sort of incentive being offered, so that more people are filing GST. GST numbers are going up, but probably the government is not satisfied.
That's a fair point.
So, Krishna, I think this incentive comes on the back of two critical issues. Number one, I think which every new product or a product in the technology space, what we call an app, any new app wants to acquire customers. How do they acquire customers? They acquire customers by these sweepstakes of luring them, with some more than normal return, which can get people to become early adopters to any new product. And in this case, the product being this new GST app. Now, at one level, I think the government wants to ensure that all GST filers, which are business owners as well as chartered accountants, take on to this app really quickly. They want this app now. Why do they want this new app to have sort of the kind of penetration which I think they would definitely want? They already have all our data, right? And the new digital data protection bill is going to further ensure that the government in any case has all the data and is able to pull all stops on whatever data they want at any point of time. But I think with this app, of course, they get all the data in one nice, beautiful, consolidated app, and they can do whatever they like with the data. But that is me being cynical, right? I think me being optimistic suggests that there is incentive for GST filers to not evade taxes, to not miss deadlines. And once they're on the app, imagine what all the app can do for them. For example, push notifications. Notify them that, hey, you are just 7 days away from filing your GST. Hey, your GST invoice of so-and-so date was incorrect. Would you like to correct it? Sending them emailers.
If you upload one more invoice, you qualify for a lucky draw.
And hence a lucky draw. So I think the lucky draw at one level is just an incentive for business owners to become early adopters to this new app that the government is launching. And by way of this, I think the government will be able to ensure better tax compliance, will be able to notify and reach out to business owners in a timely fashion and help them with ensuring that at the end of every month, end of every quarter, end of every year, the taxes are being filed on time. And this 10 lakh rupee or the 1 crore rupee is just a bait right now to get these early adopters onto the app, and thereafter the machinery of a technology product like an app kicks in, wherein you're able to communicate effectively, timely to every business owner out there, ensuring that not just do you have a much wider tax base by more people coming onto this new app, but also a much deeper penetration, much deeper touch points with each business owner.
Deeper touch points is what I think so it is aiming at. Government is still worried about the unorganized sector, which has not come onto the GST platform. Now, if I am buying something from somebody, I'll insist on an invoice, because as low as 200 rupees. So I think the unorganized sector, which some economics and we have been speaking to some, believe that it's as much as 94%. Is where what the government is targeting.
So will a lucky draw do what has not been done before? Get the big unorganized sector into the ambit of the GST? That's the big question. Will all these numbers...
I think the government is being fairly creative, and rightly so, adopting market practices, traditional marketing principles, and using them for an application which is as modern as it gets, except that it is for GST compliance.
People will start insisting on an invoice now. That's what they're hoping.
People like apps, we know that. And if they have to do something that's so essential for them on a monthly and a quarterly basis, they can do it on an app. I'm sure convenience too is very important. And if convenience comes with 1 crore rupees, then why not? Definitely. Game on. But we'll move on here on the show, and we'll keep it with the people, Karthik, because we're all about the people. We talk about markets because we are still worried about how people are investing in the markets or mutual funds. We're all about the people. And Amit, we know what has been happening with the people and their expenses over the last month or so. It began with tomatoes, it went on to ginger, and then to dal, tur dal and urad dal, food inflation to the point where it pulled up the overall inflation. Usually crude oil price increase pulls up the overall inflation. Tomato and dal pulled up the overall inflation in this country, but I'm hearing that there's going to be some good news.
Okay, so government has been taking it step by step. They curtailed exports. They put duties on exports of rice and sugar. Then they started importing tomatoes from little quantities from Nepal, or at least the UP and the North Indian markets. Now they have instructed, if I can get the graphics up, NCCF and NAFED to start selling onions and at a very low price.
Yeah.
25 rupees a kg for
kg.
onions, they've been
Yeah,
told.
right. Because
So
they're
50
putting,
rupees
export,
a
they're
kg.
putting export curbs on onions.
50 bucks a kg for tomatoes, 25 rupees a kg for onions. I mean, these are normal prices before this food inflation had actually hit us.
But they're doing with the onions what they did with rice.
What they did with rice, exactly.
So it's 40% export duty.
Yeah, export duty and a price cap.
Yes.
A retail price cap.
Retail price cap. So both ways. So you're controlling local prices and you're also making sure supply remains perfect, because you're not, because of the export duty, the exports get cut short. But I also want to understand, this is a beginning of a process, isn't it? Because, for example, tomatoes, we had the issue of not enough sowing happening in the country, and hence, you were forced to.
No, but they're saying the kharif crops sowing, the government believes, is not going to be affected by the 6% deficit in the rainfall.
Okay.
Yeah.
Okay.
So that is because
Krishna,
the timing
what
is all right.
most critical here, I think, no matter whatever the government issues by way of, of announcements and press releases,
Yes.
I think it's very important to read between the lines here and not discard the fact that this is election year. This is the making of the election year, right? Before this time next year, in the month of May next year, we would have a new government in office, the same government in third term or a new government altogether in the month of May. This is the critical year for the government to ensure that if it wants to come back to power, food inflation, which impacts every single constituency, which impacts every single voter and every single citizen, is not something that should play a party spoiler for the government to come back.
Yeah,
so the government will have to pull all stops this year, and they've had a bad track record. The monsoon was not favorable. The El Nino conditions still in the making. We've read not going to play great
One of the driest
party
Augusts
sports
we're
for them.
expecting because of El Nino.
So
And the
with
war didn't
election
help.
year, with election year, it's going to be absolutely imperative for the government to pull all stops and go after food inflation.
Yeah.
And seems they are.
And onion prices, Amit, in India's political history, we've seen parties lose elections being turned around because of onion prices.
Yeah, because
And imagine the pressure on the government, Krishna. Sorry, Amit, we'll just come back to you. The pressure on the government because you've stopped export of rice, non-basmati rice. Now, this is something which constitutes a good 60% of the world's food basket. There is pressure from the rest of the world for India to restart rice exports. So, we are in a position that we want to curtail food inflation domestically at the cost of GDP.
Right. Amit, you were saying?
No, yeah, talking about onions. Onions affect the lower classes. The farmers in Punjab, I know for a fact, they eat onions with roti. That's their staple diet. So you can't affect that. That affects not just elections, but everybody.
It's the lowest common denominator for
people who
food
vote.
sometimes.
Yeah.
Onions become the lowest common denominator for food on many occasions. So, we are hoping that prices will start normalizing from next month onwards.
Though roti pyaz has been the common adage, right? I think for the poverty stricken, the below poverty line,
Right.
just
Working
two
farmers, yeah.
plain rotis and onion
Dal.
is
Yeah,
a square meal for them, right?
Right, yeah.
So yeah, I think onion prices, tomato prices, importing 5,000 tons from Nepal, importing whatever 11,000 tons of onions from wherever in the world. I think the government will have to pull all stops, being election year, at the cost of a GDP slowdown. GDP growth or degrowth is not something that impacts the last mile. Food prices does. And the government is saying that even if our food export, our rice export or dal export or wheat export has to suffer on account of current account deficit and its contribution to the GDP, as long as we are able to import in excess quantity and keep food inflation in check in election year, is something that is going to ensure that we would have a better chance of coming back to office.
Look at that retail inflation number that are flashing, Karthik. 37.4%.
37% food inflation. That is the food
And
inflation.
apart from vegetables, the highest increases have come in spices, with 23% increase in spices. Even cereals and pulses are lower than, the increase in cereals and pulses are lower than the one in spices. We are
Food
a country
inflation
of
at
spices.
12%, vegetable inflation 37%, overall headline inflation 7.7% or so, 7.8%. I mean, we are talking about big numbers here, and this is headline inflation. This is not core inflation. Core inflation can be managed with tightening of the monetary policy, but headline inflation is something which is a pure function of demand and supply will have to be augmented.
Right, and that's what is being attempted at this stage, and we hope that the prices, get some sanity by next month. That's what Amit tells us based on what has been happening so far.
And they're aggressive. They'll just be keeping their fingers crossed that the crude remains at 90 a barrel, at least under 100.
Yes, that is one thing, and of course, all eyes will be on these food prices because we are in an election year. But moving on from that, another piece of news that really struck me this morning was, we've been talking about what's been happening in the box office. for a while now. You know, so many movies doing so well. It began with Barbie and Oppenheimer. It went on to Indian films doing so well. All kinds of Indian films. Especially a particular film which not many people expected much from. It was called Gadar 2. But Gadar 2 really being a tsunami at the box office. Great news for Sunny Deol coming out of wilderness to deliver a hit like that. But it's been a mixed bag for Sunny Deol, isn't it? He's going to, while he gets something incredible, I mean, even the numbers have beaten their own expectations of Gadar 2. Way ahead of their expectations. But he's going to lose something.
They have, in an interview that I was seeing, he has announced Apne 2 that is coming. So, and it's 377 plus till Sunday only from India, crores.
Yeah.
But a house full at the box office could result in a house empty in Juhu, but apparently
it's not happening.
But
so
apparently
it was up for auction to Bank of Baroda needed to recover 56 crores from Sunny Deol, which is little lesser than 377. For the house in Juhu, which also houses Sunny Sound, which is probably the best post-production studio in Bombay. That was up for auction, but as of yesterday, the Bank of Baroda has issued a corrigendum where it is not going to be up for auction due to technical reasons, quote unquote. So, house full and his house is safe.
Okay, great news. I mean, clearly talk about turning things around. Sunny Deol turning things around for himself in the movie business, and things turning around on its own. They say fortune favors the brave.
So I think the fine print here being, Krishna, 56 crores was due from Sunny Deol to Bank of Baroda. 51 crore rupees is what was the starting price of the auction. Over the weekend, those are the numbers that had come, and there was margin money required of only 10% of that, 5.1 CR. I think with the success of Gadar 2, 5.1 CR should be enough and more advance that Sunny Deol would have been able to pick up from the producers and put up as margin money to not let the house go under the hammer.
Right, fair enough.
He is himself the producer.
Yeah, I mean, thank God he gets to keep the house. Otherwise, pump set might come out of the ground eventually. But anyways, that's purely for comic purposes. But the fact of the matter is that we are running out of time. Before we wrap the show up, I just have one piece of information to add. Even as Gadar 2 crossed 377 crore rupees at the box office over the weekend, Rajinikanth's Jailer crossed 500 crore rupees at the box office over the weekend. So we will be talking about that eventually. But for now, congratulations, Sunny, on both the box office success and retaining your house. With that, we wrap things up here on this edition of Business Plus. Thank you, Karthik and Amit, as always, for being with us. It's a wrap here from my side. This is Krishna Kumar signing off. Keep it with News 9.
China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it. It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies. Streaming now.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion. This and more. Streaming on world's first news OTT. News 9 Plus. Download now.
इंजीनियरिंग कर रहे हैं क्योंकि सभी लोग कर रहे हैं.
Coaching is now starting from grade 3, 4, 5, 6.
कोटा जाने वाली बीच राह में आधे टेस्ट देके हैं सिलेक्शन की चाह में.
ऑल इंडिया का बच्चा कोटा जाता है.
This rat race is for rats, not for humans. So why should we even be a part of it?
The Rat Race. This and more streaming on world's first news OTT, News 9 Plus. Download now.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime. And